There are people collecting thousands of dollars every month from the stock market without selling a single share. And no, they're not day traders. They're using a strategy so simple that most beginners overlook it completely. Today, I'm going to show you how dividend stocks can turn a portfolio into a cash-generating machine. And by the end of this video, you'll understand why some investors care more about getting paid than watching stock prices go up. When most people think about investing, they imagine buying a stock and hoping the price rises. But there's another way to make money, a way that can keep paying you year after year, even when you're not actively doing anything. It's called dividend investing. And some of the world's largest companies have been rewarding shareholders with cash payments for decades. Let's break down exactly how it works. What are dividend stocks? Imagine you own a small business. At the end of the year, the business makes a profit. Instead of keeping all that money, you decide to share part of it with the owners. That's essentially what a dividend is. A company earns profits and distributes a portion of those profits to shareholders. If you own the stock, you get paid. Simple. And here's the surprising part. Some companies have paid dividends through recessions, market crashes, and economic uncertainty. That's one reason dividend investing has become a favorite strategy for long-term investors. Why dividends are so powerful. Now let's talk about the real magic. Imagine receiving a dividend payment. Instead of spending it, you use it to buy more shares. Those new shares start paying dividends too. Then those dividends buy even more shares. And the cycle repeats. This is called compounding. It's one of the most powerful wealth-building forces in the world. At first, the progress feels slow, almost invisible. But over time, that snowball starts rolling downhill. And it gets bigger and bigger. This is how many long-term investors quietly build serious wealth. Not through luck, not through hype, but through patience. Popular dividend stock examples. Let's look at a few companies often mentioned by dividend investors. First, Coca-Cola. Think about how many people around the world buy Coca-Cola products every day. The company has a long history of paying and increasing dividends. Then there's Johnson & Johnson, a healthcare giant with products used by millions of people worldwide. Healthcare demand doesn't disappear when the economy slows down. That's one reason investors often view it as a stable business. Another popular example is Procter & Gamble. The company owns household brands people use every single day. Toothpaste, laundry detergent, shampoo, products that remain in demand regardless of economic conditions. And then there's PepsiCo. Many people think it's only a soda company, but it also owns some of the world's biggest snack brands. The key takeaway? Most successful dividend investors focus on strong businesses, not just high dividend yields. Because a company that can grow its profits may also grow its dividend payments over time. The biggest mistake beginners make. Here's where many new investors go wrong. They see a stock paying a huge dividend and immediately get excited. But a massive dividend isn't always a good sign. Sometimes it's actually a warning sign. A struggling company can appear attractive because of its high yield. That's why smart investors look beyond the dividend itself. They evaluate the company's earnings, financial strength, and long-term outlook. Remember, a sustainable dividend is usually better than an unsustainable one. Dividend investing isn't a get-rich-quick strategy. It's something far more powerful, a get-rich-slow strategy. And while that may not sound exciting, many of the wealthiest investors understand a simple truth. Consistent income, reinvested over time, can produce extraordinary results. The goal isn't to get rich next month. The goal is to build an income stream that keeps growing year after year. And dividend stocks can be one of the most effective tools to help make that happen. If you enjoyed this video, hit the like button and subscribe for more investing and passive income content. And let me know in the comments. If you had $10,000 to invest today, would you choose growth stocks or dividend stocks? Thanks for watching, and I'll see you in the next video.